Welcome to What the Tech, the show that cuts right through the noise. You've all seen the headlines, right? They're screaming that the AI bubble has finally, spectacularly popped. But is that what's really happening? Or is something way smarter, way more interesting going on behind the scenes? Let's get into it. First, let's just talk about the big scary number. $1.1 trillion. That's how much value has been just wiped out from AI stocks in a few short weeks. I mean, to put that in perspective, that is bigger than the entire economy of Switzerland. A number like that isn't just news, it's designed to make you panic.
And yep, here's one of those headlines practically dripping with doom and gloom. Dreaded AI bust is here. See, this is the simple story they want you to believe. The party's over, the dream is dead. But we're here to tell you that narrative is lazy, and frankly, it's just wrong.
Now don't get me wrong, the pain is absolutely real. Just look at the giants who are carrying this whole market. NVIDIA, the undisputed king of AI chips, lost almost $500 billion in value. Meta, down over $300 billion. When companies this big take a hit, the whole ground shakes. But the real question is this a minor tremor, or is the whole continent about to break apart? And that, right there, is what this is all about. Are we watching a bust, or is the market finally getting a much-needed dose of reality? It's trying to cut through the noise and get to what's actually happening.
So let's just ask the question point blank. Is this really an AI bust? Is the whole promise of AI just over? Well, the short answer is no, not even close. But the longer, much more important answer is what we're about to unpack right now. Here's the core of it all. The headline screams, AI is busting. Total collapse. The reality? The market is finally growing up. It's getting selective. It's starting to ask tough questions and can finally tell the difference between a real AI company and one that just slapped the letters AI on a PowerPoint deck. This isn't a disaster, people. It's a correction, and it's a healthy one.
And this quote, man, this just nails it. This is the whole problem with the mainstream story. Just saying NVIDIA lost X billion dollars is not analysis. That's just updating a scoreboard. It tells you what happened, but gives you zero clue as to why. And in a market this complicated, the why is literally the only thing that matters.
And hey, if you appreciate getting the real story instead of the hype, do us a quick favor and smash that subscribe button. We go deep like this all the time here at What the Tech, and it's the single best way to stay ahead of the game.
Okay, let's dig deeper now. Let's talk about the real fault lines running underneath the market, the stuff that those lazy scoreboard headlines completely missed. This is what is actually driving everything. The news missed three gigantic things. First, this idea of capex cycle fragility. Sounds complex, but it just means the whole AI boom is built on the spending habits of a tiny handful of tech giants. It's fragile. Second, weak unit economics. A lot of these so-called AI companies are just burning through cash with no real plan to ever make a profit. And third, plain old reality. Politics. Power grids. You know, the boring stuff that can shut a multi-billion-dollar operation down overnight.
Let's really zero in on that first point, because it is absolutely critical. It's called hyperscaler dependency. Here's the deal. Imagine your entire business depends on just three huge customers. Let's call them Google, Amazon, and Microsoft. What happens if they decide to cut their budgets? Or even worse, what if they decide to just build what you sell themselves? Your company is toast. That is a massive, and I mean massive, underreported risk.
And the risks just keep on coming. These are the things that are really squeezing profits. First, the cost to actually run the AI models is just astronomical. It can completely erase your margins. Then you have regulators suddenly waking up, creating choke points with export controls and privacy rules. And my favorite, the AI wash purge is finally here. All those companies just pretending to be AI-focused, they're being found out, and their stocks are getting a brutal reality check.
Okay, so it sounds a bit grim, right? All these fault lines, all these risks. So how in the world do you navigate this? How do you survive what's coming? Let's talk about the new playbook. This is the strategy you need for this smarter, tougher market. It comes down to 4 new rules. Number 1, stop looking in the rearview mirror. A perfect earnings report from last quarter tells you nothing about the road ahead. 2, follow the actual cash. Forget the flashy product demos. Can the company actually make money? 3, expect a slowdown, not a total shutdown. This whole thing isn't stopping, it's just getting more rational. And 4, you have to completely rethink what a real competitive advantage, a real moat, looks like in this new world.
And here's what that playbook looks like in practice.
You got a few different ways the future could go. If the tech giants just tighten their spending a bit, you only want the absolute best-in-class hardware makers. If there's a bigger economic downturn, you want the companies that are basically AI utilities, the essential services nobody can turn off. And if the politicians start a trade war, well, the winners are going to be the local companies that can stay out of the crossfire.
So let's bring it all home. After all of this, the trillion-dollar panic, the scary headlines, the hidden risks, what is the one thing you need to take away from this? What's the bottom line?
It's this, right here. The beta party is ending. Real businesses will have to earn their multiple. The beta party was that amazing time when you got rewarded just for showing up. You could just whisper the letters A and I and your stock would pop. Well, guess what? The lights just came on, the music stopped, and that party is officially over. Now, you have to actually earn it. You have to prove you have a real, defensible, money-making business.
So look, the AI hype train hasn't crashed. Not at all. But it has left the station of pure fantasy and is now rolling down the tracks of reality. And that forces every single one of us to ask a tough question. Are the AI ventures you're watching, or investing in, or even working for, are they on a rocket ship with a real engine, or are they just on a roller coaster to nowhere? Thanks for watching What the Tech.